Hello everyone and welcome to this month's Brisbane Property Market Update, where I'm going to be running through all of the latest data from both CoreLogic and PropTrack to help you understand what's actually happening in our local market here in Brisbane. First of all, we'll start with the market summary. Now, listing volumes, that's total listings, month on month between May and June have declined a further 7.55%. So there are fewer properties available for sale for buyers to select from. The auction clearance rate throughout the 4 weeks of June was 64.8%, which is fairly consistent with the last 3 months. Buyer activity is still fairly high for properties up to about that $2.5 million price point, where buyer activity starts to thin out a little bit. House values across the month of June, according to CoreLogic, increased 1.1%, unit values up 1.8%, and gross yields for all dwellings currently sitting at 3.8% across the city. Let's start with property listings. So you can see there as we zoom in, the total volume of listings between May and June has declined month on month. So there are fewer properties available for property buyers to choose from compared to last month. In terms of sales volumes, at the end of May, sales volumes were up 6.9% compared to 12 months ago. So what we can then assess is the ratio between the number of new listings to the sales activity over the last 12 months. Now you'll see there, Brisbane, Adelaide, Perth, and also Sydney have a sales to new listing ratio above 1, and that indicates that market prices are likely to be increasing because there are fewer properties available for sale compared to the number of sales, which is an indication of demand. In Melbourne and also Hobart, based on this graph, you can see that their sales to listing value ratio is below 1, which indicates that those markets are more likely to be declining. And that's actually the case when we look at the sales, or rather the capital growth data. Looking at buyer demand in Brisbane, it's still actually fairly strong. Auction clearance rates, you can see across the 3 months, similar across April, May and June. Days on market is 17.4% lower than it was the same time 12 months ago. So we're still seeing a very fast moving market, and this is indicative of the fact that properties are selling very quickly. Even though the days on market is sitting at 19 days, that's likely to include any conditional period under contract, because we are seeing a lot of properties sell after the first weekend of open homes being listed. Looking now at dwelling values across the city. So for Brisbane, dwelling values have increased again, according to CoreLogic. Across the month, dwelling values up 1.2%, quarterly growth sitting at 3.7%, and annual growth sitting at 15.8%. That sits or puts the median dwelling value at $859,240 for Brisbane. Looking at the PropTrack data, this data for the month also confirms dwelling values as a whole have increased a further 0.5%. Looking at annual growth, it's sitting at 14.14%. And we're seeing $840,000 as the median dwelling value, according to PropTrack data here in Brisbane. Back to CoreLogic data now, we're looking at price growth segmentation. So it appears that the lowest 25% of property values have grown the most in the 3 months up to the end of May, moving 5.3% in that time. The top 25% of property values have shifted 3.2% over the same period. This is dwellings value data, so it indicates that more of the lower value properties, which will include units and townhouses, are moving at a faster rate. And this is consistent when we break down the house and unit data here in Brisbane. The middle 50% of property values in Brisbane has shifted 4.2% over the last 3 months. Having a look at the 12-month comparisons for all capital city markets around Australia, you'll see there Brisbane is sitting in second place behind Perth in terms of annual growth. Adelaide sitting very closely behind in third place. 3 monthly, Brisbane sitting in third place over the last 3 months in terms of dwelling value changes. Again, Perth sitting in number 1 place, Adelaide sitting in number 2 place, looking at the last 3 months. Now I'd like to just take it back to have a look at what's happened post-pandemic. So since the onset of the pandemic, you can see there Perth has shifted 2.6%, Adelaide 61%, and Brisbane 59.8%. So these three capital city markets have seen significantly stronger growth than all other capital city markets around Australia. And this is largely a supply-driven boom, meaning that these markets have the lowest available listings at a time where sales volumes are higher. Looking at 10-year growth performance, however, we start to see a bit of a shift in the leaderboard. So Hobart has actually been the capital city that's grown the most over the last 10 years with 84.7%, even though in the last couple of years it's been an underperformer. It had some significant growth in the years prior. Brisbane comes in at second place with 83.6%, and Adelaide follows with 82.9%. This is over the last 10 years. Now let's look at house values throughout the month of June. In Brisbane, house values shifted 1.1%. Quarterly growth was 3.3%. Now, when we compare this growth to last month, we had 1.4% growth in the house market. So we've seen a deceleration in that rate of growth. Quarterly also, at the end of May, quarterly growth was sitting at 3.7%. So we've seen a deceleration once again in that quarterly growth rate here in Brisbane. Looking at PropTrack data shows Brisbane dwellings in terms of houses, increased 0.5%, and the median value for a house in Greater Brisbane is now sitting at $936,000 according to PropTrack. Let's have a look at unit values now. According to CoreLogic, unit values shifted a further 1.8% over the 4 weeks of June. This is down only slightly from last month, where we experienced 1.9% growth according to CoreLogic. Quarterly unit growth sitting at 5.6%. That's actually re-accelerated because last month it was 5.3%. So the median value for a unit in Greater Brisbane, according to CoreLogic, is now $622,567. And the unit market is still outperforming the house market on a monthly, quarterly, and annual basis here in Brisbane. Let's have a look at how the monthly change in property prices has tracked since the onset of COVID in the house and unit market. So those dark bars there is the monthly change in percentage terms in the house market. The unit market are the light blue lines. So you can see we saw that short, sharp downturn throughout 2022 as interest rates were rising, but coming into 2023 from March onwards, and of course, all the way through the 6 months of 2024 to date, we've seen positive growth in both segments of the market month on month, with the unit market starting to accelerate in terms of its rate of growth, especially over the last 4 months in Brisbane. Looking at vacancy rates, there's been no change between the months of May and June, still sitting at 1% according to the residential SQM Research. Rent growth, it's still strong, although the annual rate of growth has been weakening month on month. So in Brisbane, we're starting to see the house market, 7.8% growth has been the annual rate of growth. And in the unit market, 8.5% growth has been the annual rate of growth in rents. So still stronger growth in rents in the unit market compared to the house market here in Brisbane. Of course, that's going to have an impact on the gross yields in both markets. We've got property prices increasing and rental prices increasing. When we're looking at the gross yields, in the house market, it's decreased slightly month on month, and that is the same with the unit market. So 3.5% is the house market gross yield and 4.8% is the unit market gross yield, both down 0.1% compared to last month. So in summary, Brisbane's growth rate has eased slightly again this month after re-accelerating last month, and this is evident across both the house and unit market, both monthly. But for quarterly growth rates, the house market has slowed down. The unit market has actually sped up in terms of the rate of growth. Units and townhouses are still actually outperforming the house market on an annual, quarterly and monthly basis in terms of the rate of growth here in Brisbane, and also in terms of the rent amount increases as well. This is all being driven by a supply and demand imbalance, and this is what is continuing to put that upward pressure on prices here across the city. If you are on the ground, you will notice lineups in some property types more so than others. This is an indication of real-time demand, and that's likely to follow through in terms of property price movements into the future. I hope that's been a helpful update. If you would like to connect with us here at Streamline Property Buyers, you can scan this QR code, you can get in contact with us or access any of our latest content, which will include all of this data in written form on our website. You can also book a call to discuss with our team how we might be able to assist you with a purchase of an investment property or a home here in Brisbane. Thank you so much for your time. Look forward to speaking with you again next month. Bye for now.